the whole credit issue that industry is facing, right? So a lot of the insurers and brokers, this constant battle in terms of, you owe me so much and so on and so forth. So that kind of makes the sustenance of the insurer in shaky grounds because you're getting the revenue in time and so on. Hello and welcome to FS Brew. FS Brew is the region's first podcast focusing on insurance and Insurtech here in the UAE and the wider Middle East. I'm Vidya. I'm the founder of Forward, a startup that works with insurance companies to build their go-to-market strategies.
Hi, I'm Renjit. I work with a boutique consulting firm where I work on M&A, funding, and go-to-market support for startups and mid-sized companies. So this is our news with analysis episode, and we're recording this after a while, Vidya. So we have a lot of news to talk about. So why don't you kick us off with the first item?
Sure. I think, Ranjit, the most hottest news, I think, in the UAE is the regulation, the whole broker regulations that has been issued. It was issued sometime in July. I think it is the hottest topic that is shaking the industry. There's a lot of requirements from a broker perspective that's been issued by the Central Bank of UAE. And I think it's very important from the way they're looking at it is from a very strategic, keeping the market quite solvent, we're putting in best practices and so on and so forth. So they've issued a number of regulation things around how do you categorize your whole broker license itself. So there is a primary insurance license, there is a reinsurance, and also a composite license. Then also just the whole premium collection. I think this is a little bit of a controversy. So the brokers cannot anymore collect insurance premium. It has to be collected by the insurer itself. So that's...
This is, I think, almost, I'm not sure brokers will agree, but it's welcome from the customer's point of view. It ensures that the money reaches the insurers and surprises midway that, hey, I paid my premium, but it's not gone to the insurance company.
Yeah, correct. And also just the whole credit issue that industry is facing. So a lot of the insurers and brokers, this constant battle in terms of, you owe me so much and so on and so forth. So that kind of makes the whole, the sustenance of the insurer in shaky grounds because you're getting the revenue in time and so on. So I think the regulator has understood that and has put in as a requirement, and also payment of the commission, right? So from your commission, brokers cannot discount any further to give better, let's say, premium price to the customer, which they were doing. They were like, you know what, I'm going to take a hit into my commission, but I'll give a better price to the customer. And that was their customer acquisition strategy. And it's simply because it is such a red ocean. Go ahead.
Absolutely. And I think the good thing is now the regulators insisting that the insurer has to pay them within 10 days of the receipt of premium. So that way the broker is also able to manage their cash flow situations. And that covers the case where installment premiums are paid, then the broker's proportionate commissions must be paid. So that's all healthy for the industry, right?
Correct. Absolutely. So there are a number of those sort of regulations that has come in essentially to make sure the whole industry as such is sound. But then obviously at a short-term basis, it creates a flux. Everybody has to make sure that you've got the capital flow to keep the operations going. I think another regulation that I think the brokers have to think hard is around the outsourcing requirement. I think the regulator is telling them to not anymore outsource outside of the UAE. A lot of them have call centers across in other parts of the world. What does that mean? And how do you then make sure it is operationally effective from a cost point of view and also just getting the whole operations out as well in the time frame that regulator is asking?
Yeah, and this one seems a bit risky one. It says, okay, you need to seek the central bank's approval for outsourcing material business activities. Now, question is, does material mean customer service or does it mean advising the customers about their risks? Presumably, customer service is not included. Now, we all know that these existing brokers who have outsourced, there's a lot of operations which is happening outside. So it could really impact their cost if it's suddenly have to come back here. We've seen data sovereignty requirements from regulators in the past, which makes sense, but I'm not sure if work is also forming part of that now. So it's a bit of a tricky one.
True. And then, we would need a thorough lawyer to interpret that. But The general sentiment is that generally operations cannot go outside of the UAE. That includes issuance of policies through call centers and so on. So it's going to be quite some to understand what is the magnanimity itself. And then, as you said, see how much can you keep, how much can you leave it. But yeah, so this is very interesting. I think it's one that we need to have a close watch on. And I believe they're expected to have all of this put in place by end of Jan or sometime in Feb next year. So it's not much time.
Right.
So there's a lot of work to be done for.
There's a lot of cost, there's some cost impact as well. So they've obviously talked about that minimum capital and bank guarantee. So they said that the capital requirements have not changed, but bank guarantee and the minimum capital are different. So that means some of the brokers may have to raise capital, and also they have to have external auditors approved by the central bank. So that's another cost, but it's all good governance. And in terms of governance, they are supposed to implement a comprehensive corporate governance policy, internal structure, management practices, etc., etc. All these are good things which will help the industry as a whole. So that's the number one news piece, and that's about it.
True. So what do you think as an M&A sort of an expert, maybe some M&A activities can be coming through at the back of all of this?
We've been talking about M&A for some time. I think this provides another reason for M&A to happen. But I think it will also probably weed out the not so serious brokers who had been trading on commissions and just discounts for long. They now may not be financially sound to continue in the market, and you may see some of the lower rung of the brokers dropping off the roster from the central bank brokers. So that could also happen, right? So we've been talking about this employee benefits piece for some time, right? We've been watching that it's like multiple billions of dirhams worth of end of service benefits are now or are going to become up for grabs from next year onwards. And we know that we have spoken to the CEO of Haya, we've spoken to folks from Zurich. We know that both of them are pretty active in this space. And is probably one of the leaders with their nice little app where you can offer to the employers, they can administer their end of service benefits, they are Sharia compliant, and the employees can also do investment from that app. So all in all, they seem to have stolen a lead. Of course, Zurich is already live for many years in DIFC with their dues program, so they can very easily expand it to rest of UAE. So it's going to be a very interesting battle. Do you see other people jumping in as well?
Very loudly, it is these two guys that we could see, because in the recent past as well, they had these road shows, and Fab roadshow by one, and then the other one has gone to the next level of roadshow, which was really good to see, because these are the sort of engagement one needs to have in terms of building the product awareness, understanding customer sentiments, and then crafting that product based on all of these insights, right? So I thought that was really good. And I really liked Zurich's report on the whole future of work around employee benefits. So they try to understand what are the broadly pillars that goes in from an employee engagement perspective when it comes to benefits, right? So what do they really cherish? And then there are some really good, strong stats. So I think they've done this for markets like UAE, Bahrain, Saudi, and Qatar. So very much relevant to the region and not a global sort of a study. So I thought that was really good. And some staggering insights in terms of how employees truly value a personalized benefit and really like it if they're empowered in terms of choosing. There's a customization. It's not just based on your role or your salary or any of those very plain information. Quite strong study on of this, and also tells you how much of, because of these insights, how much potential is there to create a really strong products. And it feels like this might be an area where we can see some product innovation finally coming through from the insurers.
Yeah, no, sure. Quite clear from the report that of the people they spoke to, everybody considers that this is a big gap, and they're looking for guidance on, employees are looking for guidance on financial planning and are looking at new savings opportunities. So all in all, it's a great space to be. It fits in with many of the insurers' own investment. They've been investing in various forms of securities as part of their business. Now it's a matter of crafting solutions that help employers as well. Obviously, the life insurance companies will get a bit of a stronger push here. The non-life guys don't have a say in this, but it's going to be quite interesting.
Yeah.
All right.
Yeah. Okay. Great. And I think the next news piece is more close to our hearts. We want to be able to showcase and put a spotlight on the Insurtechs within the region, what they're up to, if there is anything that we can do to push their costs. So there are a couple of things that we picked up in the recent past. We got to know there is a new Insurtech in town. They call LookInsure. They seem to be currently providing motor insurance, but they want to be able to focus on the whole CX experience. Both of us had opportunity to speak to different members from the startup, so we know that they have the plans to be able to broaden out. So that was one that.
Just a point on that. I think they've taken a different approach from other aggregators, so to say. They have this almost like a straight-through processing, right? If you upload your ID, Emirates ID, and
license.
Yeah, absolutely. They can fetch the data. So they're proceeding very much on the lines of what Saudi is doing, and that could be. So instead of just being a lead generator, it's actually helping you fulfill the whole transaction. So that's pretty interesting in terms of
But also from now knowing that they cannot collect insurance premium, they will have a lot of those back-end APIs to be doing with the insurers. So there's a lot of tech that will be backed by this amazing CX experience from that perspective. Yeah, so the other sort of startup is, they're not really a startup, at least a new age insurance brand is Shory. Now, we saw that they have picked up a lot new products. Earlier, they were focusing a lot on motor insurance, but now we see that they are into health. They have now home as well, and also pet insurance. So pet is back in conversation. Yeah, interesting to see Shory doing all of these innovative products, or at least broadening out and moving away from motor, although that's been their biggest focus since their launch. Renjit, any thoughts on this?
Yeah, I think they went all out when they launched with motor insurance, and then it seemed like there was a bit of a retrenchment into business, and now I think they're again back to the personal side. So perhaps they've been infused with some fresh capital. We haven't picked that up anywhere, but yeah, it's good. It's like a very decent date. They've got a nice little app, and their product suite seems to be growing day by day.
Yeah, they seem to be signing up with a lot of insurers and trying to create, obviously, the products at the back of their underwriting capabilities. So yes, a lot of innovation. But just as you said that they've obviously got fresh capital, you can see a lot of their advertisements. And just staying on advertisements, Protego, right? Protego is everywhere too. So you would see a lot of their hoardings. You're seeing a lot of their digital ads coming on to your way. So that's a new insurance brand that's come up. An interesting one because it's a bank providing an insurance. Yeah, go ahead. You say.
I just want for our listeners, this is from a brand from Rack Bank, right?
Correct. So
does it have any ownership from the Rack Insurance company as well, or no?
It doesn't feel like it. At least when we went to the website, it all seems Rack Bank sort of a thing. So it is bank coming up with this whole product or this brand. So it goes on to tell you that they might have seen a huge potential in investing in insurance because they clearly have created a whole look and feel, a new brand name, investing a lot of money on all of those hoardings and advertisements and things like that. So hopefully they're seeing the TAM around this.
What are your thoughts on that? We always say B2C is a bit of a graveyard for companies, right? So should companies like banks invest in building a B2C brand for insurance, which is not their core line of business? Now, this is something it's worth thinking through. But anyway.
True, right? So, for instance, a Rack Bank, you would have thought they would have created their version of a Bio Bank or ENBD's Live Bank and all of that. But instead, they've gone with something around insurance, which I'm, as a positive, a very hopeful person, I'm thinking, they can see some TAM. They're seeing a lot of this non-motor TAM as well. And hopefully we can see that product innovation. Just on the spend itself, I don't think as a marketing consultant, I don't think it's prudent to splash a lot and then die and then splash again. It has to be in a sustained manner. It has to always be at the top of the mind. If you have the money to splash all year around, let's say insurance market does, go ahead. But I don't think this peak and drop is the right way to do.
Speaking of insurance market, have you seen that metro station that they have taken over? How good is that?
How cool is that? Absolutely. It's great that they're getting into that mainstream mindset. I think that whole share of voice which Avinash and the team are going after seems to be working for them, because anybody you ask about insurance, they only talk about insurance market.
Moving on to the next one, a little bit from the outside perspective, outside UAE perspective, we saw this news report, rather a report on funding that came from Deal Room, Mundi Ventures, and MapFree. So, Insurtech investment third quarter 2024, $3.2 billion of funding in Insurtech companies. It's less than 2023, but this is a positive trend as per the report, and it seems that there's a rebound in funding in the fourth quarter. Some sign of stabilization is being seen in venture cap funding, primarily in Series B, Series C funding. And it's projected to reach about 4.2 billion by end of this year. And which are the sectors that are getting attention? It seems no surprise. A lot of this is going in artificial intelligence.
Gen AI.
Yeah, Gen AI seems to be the flavor here as well. And the geographies seem to be, again, US leading, Europe, and then Latin America and all. This report did not mention Asia, which is surprising. I would have expected Asia to be just after the US, right? Maybe I missed that piece. Also, the other areas are climate risks and health, apparently. So that's also interesting.
That's interesting, because we know in the region, in the Middle East region, we are not seeing much funding towards the Insurtech. But that said, we also know of about 2 to 3 that may be securing their funding, and we may be hearing a Series A news coming through of a well-known Insurtech here. We also know of another Insurtech, which is more on the B2B side, potentially has secured as well. So maybe there are just 2 or 3 that may be coming through, but nothing significant in comparison to the other mature markets.
Yeah, absolutely. So definitely we hope to see some more money being spent. Maybe this is the approach. Maybe Insurtech should take a look at where the funding is going and see if they can replicate that in the Middle East, right? That's probably the other approach in terms of the solutions that they can offer, right? The issue is that we don't have any climate risk. Major, I say,
Not major.
Yeah, major climate risk. And but cyber remains, so, and I think definitely Gen AI, we haven't really scratched the surface of what you can do with it, right, to create Insurtechs.
True. No, I think the problem with Insurtech specifically is that the VCs or the traditional guys who are dispensing that money are typically asking for some traction. Now, if you are especially an Insurtech that is dabbling a little bit on the retail side, you got to have regulatory approvals done before you test it out live with customers, right? So that means I have to get the buy-in of the broker or the insurer and so on and so forth, which is a chicken and an egg. You're not getting that if you don't have a backing of an investor. And then here you need to have this to go back to the investor saying, hey, I have built traction. I've got the first 100 customers. So it is a difficult area to be in, unfortunately. So maybe that's one of the reasons why we're not seeing a lot of funding coming through on the Insurtech.
Yeah, you need some patience to succeed in this.
Huge.
Okay, so the next piece is about reinsurance companies, and this is obviously last year's performance. 2023, the top 5 global reinsurers posted a record 22% return on equity. A great improvement in that means net investment income was high, underwriting gains were realized, and some unrealized capital gains. So we've seen a lot of hurricanes hit this season. So next year may not be the same story. So that's point 1. Point 2, what was interesting was their own investment has now decreased from private equity, hedge funds, high risk investments to fixed maturity investments like government and corporate bonds. So that has increased their income. Second is, it seems that they are migrating higher up in the layers of risk and enforcing the terms and conditions, which means some of the lower levels of damage, which is naturally coming up, is being picked up by the insurers themselves. The reinsurers are getting less exposed to those damages. So those are some of the key things that came up. Thoughts, Vidya, on this? and
And,
what
and
happened in
also
terms
why
of
is, yeah. No, as in, so why is that? This is going to be a recurring thing, and even in UAE, when we had those floods, it is no more considered as a one-off. It is almost understood that it is going to be a recurring thing. And I
yeah.
think this year, a lot of the insurers spent a heavy amount of conversation and energy in convincing the reinsurers to not increase their rate. There was a huge debate going on between the insurers and the reinsurers, and I think they have managed successfully to retain the similar rates as this year. But
Yeah.
you know that this is going to be a recurring thing. So for reinsurers to then change their strategy feels like maybe there is some insight.
I guess everybody has woken up to climate change and they realized that these 1 in 200-year events are actually happening every 2 years.
Every year.
So,
Yeah.
yeah, I
Yeah.
think, by the way, I think we should just acknowledge that we are recording this just after Trump has come back to power again.
Yes.
And while the impact on climate change could be that he could again withdraw from some of these treaties and all those climate change actions take a backseat, has an implication on insurance industry as well. Right? Worth pointing out. I'm trying to be very politically neutral here while we record this.
My
All right.
expression gave it away, but yes.
Yeah, I think US did. Yeah, US gave it
Yeah, great. But yeah, overall, this whole NatCat thing is a big focus, and many mature insurers, brokers are investing a lot in that sort of tech capabilities, understanding how you can be innovative in the way you can still cater to the areas that are getting affected on natural calamity geographies. But yeah, so Ranjit, you had a very interesting startup around that you wanted to highlight. Maybe we can talk about that now.
Sure. So we discussed this in our, I think in our Gen AI episode, Kettle. And so recently they've had a CEO appointment. Isaac Espinoza is his name. I hope I'm pronouncing his name correctly. But anyway, the point is, so they're into AI-enabled insurance for, and also are a reinsurance provider for commercial property owners affected by cat climate events. So something that we have been talking about right now. So they basically have developed models, AI models that are able to predict forest fires and the damage due to forest fires in places like California, where other insurers are withdrawing. Their AI models seem to be performing better in predicting. And if you're better in predicting, that means that you can be better in pricing, and therefore you can price for the risk. Instead of saying, I'm not insuring, you can say, I will insure at this price. So that's what they're doing. And they seem to be doing pretty good. And I think that's a great application of AI in tackling climate change.
Absolutely. Absolutely. And that's just how it should be. And I think this is the tech for good, or force for good, and using it in the right way. I think even when that whole COP28 happened here, they were constantly talking about having the right tech to be used in those areas versus withdrawing insurance altogether, like you said. And it's a great example of that. There are a lot of them that's come up in the recent past as well, isn't it? Oka and all of them who look at finding really green ways or of underwriting from a green perspective as well. So, yeah, great example.
Absolutely. So that kind of brings, is this the end of our news episode? I think so.
Yes. As of now, yes.
Is there any last piece that's missing on our docket? No, that's it, right? All right.
That's pretty much it. Yes, we hope to do this more regularly. I think it's exciting to go through all that's been trending and give our 2 cents around it.
Yes. Yeah. Our 2 fills around it.
2 fills, correct.
Now, this is something, Vidya, we have not been doing. We have to tell our listeners, there are people who listen to this. If you like this episode, please share, subscribe. Now, this is what, Mr. Beast and all the other people are telling me to do. So,
yes.
we need to get more subscribers. It helps reach listeners like you. So that's why we are asking this. We've never really asked this too many times.
Yes. And every time we've met a listener or met anyone who sees our videos and stuff, they absolutely love the content. So it'd be great if you can do that. Like Renjit said, subscribe and comment if you love this episode. We loved sharing all of these news pieces with you. Until next time, bye-bye.
Bye. Take care.